Well, it's tax time again, and on this episode of Making Sense, we're going to discuss on how to file your taxes and what to do with your refund, and also how to avoid an audit on this next episode of Making Sense. Welcome to another episode of Making Sense. My name is Nino Gonzalez, and like I mentioned before, it's tax time again. So how are we going to get those taxes done? Well, in previous shows, I have talked a lot about the VITA program, the Volunteer Income Tax Assistance Program, and there's free services out there that you don't have to spend a dime to prepare your taxes. And of course, the VITA program is run by the IRS, and the volunteers are trained by IRS certified personnel. So you know that your tax return is being done properly. Now, there are some qualifications to be able to participate in the VITA program. You must have incomes of $54,000 or less, usually people with disabilities, elderly individuals, and taxpayers with limited English speaking ability. But if you fall under any of those categories, please go to the IRS website and find a location near you and try and get your taxes done for free. Not only that, they will also electronically file and be able to do direct deposit without you paying anything. Now, another one that the IRS runs is tax counseling for the elderly. Now, that is limited also to people 60 and older. And sometimes they combine forces with AARP, the Association of American Retired Persons, and they have another program called Tax Aid. And usually they focus on people that are 50 and older and can't afford a tax preparation service. So I'm going to put up some websites that you can go and take a look at to find locations that are near you. So one of them that I mentioned was, of course, irs.gov, and in the search box, just enter VITA, the VITA program. And another one that we had individuals here in a previous show, and that is just focused in El Paso, is freetaxeselpaso.org, freetaxeselpaso.org. And we'll be putting those up on the screen so you can visit and find a location and hours that are convenient for you. And so let's say that you don't qualify under the under those guidelines. What else can you do? Well, you can do DIY, do it yourself. So there's free online software use that is provided through the IRS, and that income is a little bit higher. You need to have an adjusted gross income of $64,000 or less, and just go to the irs.gov, and they will link you to software providers that will provide you online software and tax preparation for free. Or if you don't qualify under those and you want to maybe tackle it a little bit more, then you can use off-the-shelf or online tax software, depending on your comfort level and depending on how complicated your tax return is. But most people can use these type of services and do them themselves. Now, of course, if you go through off-the-shelf or online tax software, you're going to have to pay a fee for that software. And we know the most common ones, which are TurboTax, TaxAct, TaxSlayer, H&R Block, just to mention a few. Because basically what you're going to be doing yourself is what a tax preparer is going to be doing themselves, typing all the information in, but it all depends on your comfort level and whether you know what to put in or not. Now, if your tax situation is a little bit more complex and you don't have that comfort zone and you can't qualify under the free tax service or the free online software, or you just don't want to do it yourself, then the other route is to pay someone to do it. And this is what I suggest. It all depends on the complexity of your tax situation. Not all of us need a CPA, a certified public accountant, to do our taxes. There's also other individuals that can prepare tax returns. For example, there's enrolled agents, and enrolled agents are certified by the IRS. And then, of course, there's tax preparers that we see everywhere throughout the city of El Paso. So one of the things that I would suggest when picking a tax preparer, if you can, try an interview or talk to several preparers, because you need to find a comfort zone within you and that preparer, and also get somebody who's experienced and qualified to do taxes. Ask trusted friends for referrals. Who do they use? Have they been happy with the services that tax preparer has provided for them? Also, tax preparers must have a PTIN, a preparer tax identification number, and some of them, they require continuing education. So go to the IRS website, irs.gov, and check and see if that tax preparer has at least a PTIN number, and also what other qualifications, and also are there any actions against that tax preparer. And that's another word of warning. Watch out for bad reviews and disciplinary actions. One way to find that out is through the IRS website. And of course, we all know about reviews. You know, people, if they experience a bad situation, they will write a bad review, or sometimes they will write a good review if they had an exceptional experience with somebody. So one site that is aimed especially for tax preparers is called taxbuzz.com, taxbuzz.com. And basically, people go up there and write reviews on different types of tax preparers, including CPAs, enrolled agents, and other types of tax preparers. Of course, another common one is angieslist.com, the Better Business Bureau, Yelp. Nowadays, you can just Google a tax preparer's name or a professional's name, and stuff is going to come up about them. And you can read and see whether there's any actions against them, and see whether they have good reviews or bad reviews. But be an informed consumer, especially when you're paying somebody to do your tax return. Also, when you pay somebody, ask if they will e-file your return. Most of them will, because it is a faster way to get the return to the IRS. It's more secure. And also, if they offer direct deposit, and are they going to charge you for that direct deposit? Like I mentioned, with the VITA sites, there's no charge for that. If you go online and do that on your own, there's no charge for that. If you purchase the software, usually it includes the e-file. And one last thing to take into consideration when you pay somebody is what is going to happen if you get audited. Is that individual going to be able to represent you with the IRS? Not all individuals can represent taxpayers with the IRS. The only ones that can are enrolled agents and CPAs. So what's going to happen? Are they going to be able to help you? Is it going to be something that maybe they can handle it through correspondence, or do they have to go to the IRS office? Or will you not find this individual anymore after tax season? Because a lot of tax preparers, once April 15th or the extension deadline comes around, they close up shop and they don't open up again until January. So you need to be informed and ask them, what will happen and what will you do for me if an audit happens? So something to be informed about. So now, we got our tax return done, and hopefully you're getting a refund. Some of us are not that lucky, but what happens if we get a refund? How are we going to spend it? Well, I'm going to give you some ideas on how to try and spend that tax refund wisely. In 2016, according to the IRS, the average refund was about $3,053. That's quite a bit of money. So what can we do with that money to spend it wisely and maybe help us in our lives? So one of the things that I would suggest, if you have credit card debt, try and pay it down. Pay down some of that high interest debt. A lot of credit cards are carrying an average about 15, 18, sometimes even 30% interest. So instead of trying to invest that money, it would be a much better deal to try down and pay down that high interest debt. Another thing that you could do to get you motivated of getting into paying off your debt is maybe try and pay off some small debts. Maybe that refund can cover several small debts, and that'll help you get motivated to try and tackle the bigger debts. So that's another suggestion. One of the things that I've heard from individuals is also if you have a sizable refund and you have a mortgage, send that extra refund to your mortgage as an extra payment, and make sure you tell the mortgage company to apply it to principal, and that will help you cut down maybe one or two payments off your mortgage. Another suggestion is fatten your emergency fund. Remember, usually individuals suggest that you have at least 6 months or longer worth of savings in case an emergency happens of your salary. So try and put that into savings for an emergency fund. And just to give you an idea, the statistics show that if you lose your job and you're 54 or younger, it will take you about 34.7 weeks to find a job on the average. That's almost about 9 months. And if you're 55 and older, that's going to take you about 45.6 weeks, almost a year. So take that into consideration when you're building that emergency fund, because you might need to have funds to carry you for a while. So not a bad way to use that refund. Now, another thing is, how big is your retirement fund? How far are you away from retirement? So another thing could be putting that aside and saving it for retirement. Dumping that additional money that you wouldn't originally have and put it towards your retirement. Do you have kids that are going to go to college? Maybe save it for college. Do you feel generous? Maybe contribute it to charity. And what if maybe you have a dream of starting a freelance career or a little small business in your home? Maybe you can use that refund to help you aspire those dreams of doing that. But just make sure you plan on what is it that you're going to do, because a lot of businesses, even if they're home-based businesses, they fail because we don't plan to fail. We want to plan to succeed. So make sure that whatever we have in mind on starting is a viable solution. Another thing we can do with our refund is to replace appliances, especially that stove, that furnace, that water heater, whatever it is. That might be a good time, if you know it's going to go out in several years, to invest that refund in those appliances that might need to be replacing. And another thing, one last thing that might also be important, invest in your career. If you need to sharpen your skills, maybe do some continuing education, get some certification, maybe equipment, maybe clothes for your work, that might be another method to spend that refund wisely. Well, in the second half of Making Sense, we'll talk about some of the things that the IRS takes a look at that might trigger an audit. Welcome to the second half of Making Sense. And in the first half, we were talking about how to get your taxes done different ways. Either you take the free route, you pay somebody to do it, or you do it yourself, depending on your comfort level. Another thing that we talked about was how to spend that refund wisely. Just giving you some ideas. You might have some additional ideas. And maybe send me an email, let me know, so that way I can include them maybe in another show. But now I'm going to talk about is what the IRS looks for as red flags for an audit. So one of the things that you need to be careful about is make sure you report all your income. That means, of course, your W-2s and your Form 1099s. A lot of us ignore those Form 1099s, and there could be several. The most common is 1099 miscellaneous, which is for independent contractors. And just because you didn't receive one in the mail doesn't mean that that business didn't report it for you. Usually, they have to send you one over a certain amount, usually about $400, $600. If they pay you more than that, they have to send you an amount, Form 1099. But just because they didn't send you one didn't mean it never got reported. So be careful about that, because the IRS uses a matching system. So if an employer or a business sent a W-2 or a 1099 to you, they're going to report that information to the IRS. And if you fail to report it on your tax return, well, then it's not going to match up and you're going to get a notice. Usually a notice through the mail saying, hey, you failed to report this and now you owe this additional amount. Or if you don't agree with that, then do an amended tax return, including the amounts that you omitted. But not only that, you could be subject to penalties and interest. So make sure that you gather all the information and report all your income. And sometimes what we do is we're in a hurry, especially if we're going to get a refund, and we submit that tax return even before we get all those documents. And later on in February, we might get a form and we're saying, oops, I already filed my return and now I get this form. Now what do I do? Well, the smart thing to do is to file an amended tax return right away and take care of it before any penalties and interest kick in, if applicable. Which means if you got a refund, you might have to pay some of that back depending on the amount that is reported on that form. Another thing that I've seen is especially people that like to go to the casinos. Sometimes they misplace any winnings that they got through a 1099 gambling winning statement, and they fail to report that. So make sure that you gather all that information that you need and report all your income, because that's one of the main things that triggers an audit. Usually it's a correspondent audit because things do not match. If you run a small business, even if it's out of your home, prove it. Because if you are showing more than 3 years of losses, it could be considered a hobby, and those losses could be disqualified. Now, if you're running a business, you're not in business to not make money. You're in business to make money. And if you've lost money more than 3 years, then make sure you keep all the receipts and make sure that you're living, eating, and breathing that business, and that it's not a hobby. A lot of times we confuse hobbies for businesses, but if they're not making any money, then and after so many years, the IRS could disqualify that as a business and consider it as a hobby. If anything seems weird, explain it. For example, your wages do not match your lifestyle. They do take a look and see, hey, what area of town do you live? You know, they take a look at your, they might take a look at your investment accounts, your savings accounts, because all of that has to be reported. So if you're not making enough to justify your lifestyle, then you might have to provide an explanation on why is it that you can afford that lifestyle, but you don't have enough income coming in. So explain if anything seems weird. Watch for home office and vehicle deductions. The IRS has simplified the home office deduction, but make sure that if you're working out of your home in a home-based business, that space is only dedicated to that business. And also vehicle deductions. The way to keep vehicle deductions is we need to keep, especially if you use it for both business and personal use, you must maintain a log. Must maintain a log in how much are business miles and how much are personal miles and how much are commuting miles if you have another job. And all of that must be reported. And a lot of times I've seen clients that come in and they sort of guess at these things. And guessing is not an option. You must have documentation in case you ever get audited. And that goes back also to when you find a tax preparer. Are they asking the appropriate questions? Because a good tax preparer is going to ask you for documentation, and they're going to dig deeper to make sure that you've included everything that needs to be included on that tax return. So another thing to be aware of if you're choosing a tax preparer. If we have money, any type of money overseas in a foreign account, it's really important, whether it's bank or investment accounts, that we report that. The IRS and the U.S. has formed a law that requires compliance from certain countries to report any type of overseas accounts that U.S. citizens own. So make sure that that is reported on your tax return, because if it's not, that could also trigger an audit. If you sell your primary residence, make sure you report the sale of your home, even though none of the gain might be taxable, because if you're single, $250,000 of that gain is not taxable, and if you're married, $500,000 of that gain is not taxable. But you must still report it. And usually, the mortgage company or the title company that handled the sale will send you a form, and you must report that and report any gain or loss based on what you sold it and what you acquired it at. And like I said, even if it's at a gain and it's not taxable, that must be reported, or you'll probably get a notice from the IRS saying, why did you not report this, even though the gain might not be taxable? And there are certain qualifications that you must fall upon in order for those gains not to be taxable. Be smart about mortgage interest and property taxes, especially if you itemize. So for example, I've seen a lot of individuals that might take mortgage interest deduction or property tax deduction on property that doesn't belong to them. For example, they might say, well, I'm paying the property taxes for my parents, so I'm going to include it in my tax return. You can't do that, because the property has to be listed under your name. So the only ones that could take that property tax deduction or that mortgage interest deduction would be the owners of the property. So be careful of that, because I've seen a lot of clients trying to do that, and they get surprised when I tell them they can't do that. Also, if you have a small business, expensive travel and entertainment expenses. That's real important, because the IRS takes a look at that carefully, especially if you have a lot of travel in your business and you're generating a loss, or you have a lot of entertainment expenses. And what are entertainment expenses? Well, we take clients out to eat lunch, we take them out to eat dinner, we might take them to a show, and at the same time we're discussing business. But if the IRS sees a lot of that, that could trigger an audit. And they do compare. They run averages, and they already have an idea of more or less how much these things should be. If you have a lot of charitable contributions, make sure you get receipts and make sure that you can document those, especially if they're in cash or they're in items. So make sure you can document that and that you can substantiate those charitable contributions that we made. So those are some of the things that the IRS takes a look at and that could trigger an audit. So now that we talked about taxes and we talked about maybe how to use your tax refund wisely, and what are some of the things that the IRS takes a look at when that could trigger a possible audit. So it's a new year, and a lot of us want to start new things, especially with our budget. And one of these things that we need to take a look is we need to take a look at some of the overlooked expenses that could ruin your budget this year, and they've probably happened to you. And one of the things that we always fail to take a look at is auto maintenance and repairs. Our car is going to break down. Our car is going to need something at the worst time when we don't have any money. But we should know that these things are going to happen, and we should have some money set aside so that way it doesn't create that stress in us. And not only that, maintain your vehicle, because maintaining your vehicle, that means doing the appropriate oil changes and tune-ups and fuel injection cleaners and whatever. Try and maintain it the best as you can, because that could cut down on these major repairs that could happen at a later date. So keep your car in good shape and make sure you save money for those unexpected expenses. Children's extracurricular activities, that's also something that we overlook. Our kids could be involved in so many things, in clubs, in organizations, in sporting activities, and these require dues, they require uniforms, they require trip expenses, and they could require fundraisers. So make sure we take those into account and we write them down in a calendar of when these things are coming up and when these things are due, because all of a sudden they catch us by surprise, even though we know it happens year after year. Pet care. Now, a lot of us love our pets, and a lot of us consider them family members, and when they get ill, it costs money. So are we prepared to handle a major illness or a major injury to a pet, and can we afford that? And that usually comes out of the blue. I know you should also take into consideration what they require on a yearly basis and make sure we plan for that. And regular monthly fees, usually sometimes we pay these on a quarterly, semi-annual, on a yearly basis, but we need to be aware of those. For example, a lot of us might have homeowner association dues, and they might be billed on a quarterly or an annual basis. And depending on how much those are, let's break it up monthly, so that way we're saving it. Another thing that's coming up right now, property taxes. So property taxes, usually we're shocked and we're saying, hey, now how am I going to come up with this money for the property taxes? Well, you knew about it because it happened last year. So why don't we split up last year's amount and put it away, so that way when January 31st comes around, we have that amount saved up and it doesn't come as much of a shock and how we're going to come up with that money. Special events, our family members, our relatives getting married or having birthdays, make sure that we have that money saved up for gifts and for travel expenses and for anything else that might happen, because otherwise we might not be able to attend that special event. So these are some of the things that can ruin your budgets, a little bit of overlooked expenses. Hope this was a valuable show, and you have a great year, and get those taxes done, get them done ahead of time, because that's something that identity thieves look at. So we need to make sure that we get those taxes filed in on time. So we'll see you next time on another episode of Making Sense.